Hello and welcome to the Southern California housing market update for January 26th, 2021. My name is Stephen Mead. I'm the broker and owner of Domicile real estate for people who love houses. And this week we have an especially interesting market update for you, not just because of the numbers within the market update, of course, but also because we have the answer to the question that everyone has inside of their head but is afraid to ask, or rather, people are asking us, and we think for every person who asks, there's probably at least 10 who are thinking about it and haven't asked us yet. So I'm going to get into our stats this week and kind of go over what we think is going on and what we think is happening. And then we are going to answer that question that we all know you are thinking. So without further ado, here are our market stats. Let me pull these up. And I think, really, I'm surprised that we kind of went a whole year without having this statistic available. So, what you are looking at is our total active listings, right? Like, this is just a pretty simple gauge of how many properties are out there active on the market in these respective categories. Now, just as a reminder, these are for LA and Orange counties. And this is all property types. So that means this includes condos, single family homes, cabins, kind of everything is lumped in here. We really wanted to use the most comprehensive sort of data set available. And if you look, the shape of this graph really says what the problem is. And if you look towards the end of last year, this is our under $1 million category. We were below 5,000. Inventory rose up through the middle of January, and then it started declining. This is not normal, folks. Inventory does not normally decline in the month of January. Normally, it gets better in the month of January. And we see the same thing, perhaps to a lesser degree, for our $1 to $2 million sort of luxury market category as well. And really, this chart kind of sets the tone for sort of the way the market is right now and this week. So if we move on here, this is our new listings in the last 14 days. And, we kind of see a little bit of an explanation on that last graph, right? As towards the end of the year, new listings dropped in both of our price categories. Then when the new year hit, all those listings that have been waiting in the wings, right? Nobody wants to put their house on the market between Christmas and New Year's. All those listings kind of came back on the market. Inventory went up, and then this past week, something terrible happened. These are the new listings in the last 14 days. And guess what? That number is going down. And that's a problem. And there's a couple of reasons why that's a problem. Number one, normally as we go through January, we see kind of this nice escalation. I'm going to go off screen share here. We see this really nice curve as sort of the market accelerates into spring. And here in Southern California, we actually see that beginning in January. There's kind of a new year, new house sort of thing that we have. And then once we start hitting like March, things really accelerate. But it's a bit alarming when we see not only are things not accelerating in January, they're actually pulling back slightly. And that's very unusual. That is not typically what our market looks like in the month of January. So I look at that and I think, what are the fundamentals in our market that maybe have changed this year versus years in the past? We still have a pandemic, of course, and we still have very low interest rates. But why is this year not seeing these huge inventory jumps that we've seen in the past? And actually, there's a clue to it when I talk about that burning question that maybe is on many of your minds that we're going to answer here. So heading back to the charts, we see this little bit of a decline, and it's in both price categories. So it's a little bit more noticeable here in our under 1 million, but even down here in our 1 to 2 million, this graph is not shaped like we might expect it to be shaped. Now, if this is the supply side of the market, right? Last 14 days, new listings. What does the demand side of our market look like? Well, if we go in here and we look at our demand, we see sort of a similar curve, but the problem is, unlike that last graph where the number of new listings fell off and flattened and actually declined a little bit, number of new escrows, that number keeps climbing. So, the problem we have here is we have supply is basically stagnating, right? Like we're not seeing the volume of new listings like we'd expect. But boy, buyers sure are ramping up. And they're ramping up in both price categories, a bit more in our under 1 million, which is to be expected. But even down here in our 1 to 2 million, we're seeing buyers ramp up, and we're not seeing sort of a commensurate increase in listings as a result of that. And only time will tell. Will the market respond to the buyers and be like, now is a great time to put my house on the market? Will we see these sellers come out of the woodwork? I'm actually thinking that we might not, at least not in enough of a degree to sort of like change this supply and demand dynamic. And right now, the supply and demand dynamic is very much shifted in favor of sellers. And finally, if this is our demand curve, right, we see our supply curve is stagnating, our demand curve is continuing upward. This is our absorption rate, and this is where we basically reconcile that relationship of supply and demand. And when we do that, we see a problem. Or rather, if you're a seller, this isn't much of a problem at all. In fact, if you're a seller, this is really great news for you. You see that we kind of have this point where absorption rate hit a bottom in that kind of first week in January, second week in January. But then look what's happening, and look at where these numbers are. You've often heard me kind of use sort of, these aren't official numbers. There's no guidebook that says what these mean. But generally, for me, anything that is about an 80% absorption level is a strong seller's market, right? It means the supply demand curve is definitely shifted in favor. That relationship is shifted in favor of sellers. As we head above 90%, it's what I call a hyper competitive market. Supply is constricted. Buyers are fighting over houses. The most desirable houses are being fought over just incredible competition. And over 100% means our market's completely out of whack and like something's got to give. And if we go back here and we take a look at this chart and we look at where these numbers are falling, right, or rather where they are rising to, we're above the 90% point for under $1 million. This is very much a hyper competitive market. We are knocking on the door of 80% in our 1 to 2 million. These are incredibly strong numbers for a seller's market, and I think that just sort of indicates this is the kind of market that we are in. And what's really interesting is if you kind of look, even as far back as towards the end of last year, like things were, they accelerated to this point where there was very little inventory. Then they fell as new inventory came in the market, but we are heading right back to those hyper competitive levels, and I don't really see that changing anytime soon. We're going to talk about interest rates kind of towards the end here and how that factors into things. So if we look at our closed prices, I think this graph is really interesting, right? And if you look here, you see something unexpected, right? I just spent probably 5 minutes or so talking about what a crazy market it's in. And then we look, what happened to our prices at all three price levels, right? Our entry level market here in blue, our median market here in red, and our luxury market here at the 75th percentile in yellow. All of them dropped slightly. And the question is why? Well, it's important to remember the timing of this data. These are closed prices, meaning where were these deals negotiated? Well, they were negotiated between the 17th of December abouts or kind of in that period of mid-December. Now, not to pull an I told you so, but if you've been watching our videos and if you were watching back in December, I may have said something similar to things aren't great, but they're a little bit easier than they have been. And if you've been waiting in the wings, now is the time to make that jump if you're a buyer. Well, guess what? It was true. That is exactly sort of where we are right now is we're seeing a slight softness in prices from about a month ago or so. That sort of mid to late December was actually a pretty decent time to be in the market. It was a little less frantic. Even though there was lower inventory, there were fewer buyers in place as well. And we saw those weeks supply actually going up. If you watch our first time home buyer video, we do a week supply index as well for entry level properties. I fully expect that in the next week or two, we will see these numbers reverse and you will see closed prices heading higher as they start to reflect these January numbers. Now, this is something new. This is a new metric that we're using in 2021. And I really like this metric because I think this is a great way to see what direction is the market heading. And I think the direction that we see in both of our price categories, under 1 million and our 1 to 2 million, is that things are getting more competitive. And this measure is the percent still active at the 14-day mark. So this is what we do. We look back and we look at every house that came on the market in the last 14 days. So that might mean houses that came on the market yesterday and also houses that came on the market 14 days ago. And we see how many of these homes are still left on the market, basically. And if we look here for our under 1 million, that is, that is fewer than 65% of those homes that went on the market in the last 14 days are still there. That's really incredible when you think about it. And even for our number here in 1 to 2 million, we're still in the low 70s, and we see these numbers are still trending downward. That means that this market is still getting hotter. It hasn't stopped its accelerating pace. We are still seeing things get tighter. So, this is a new chart for us. I personally kind of like this one. I think this is sort of in a nutshell, what direction is the market heading? Well, things are getting tighter if you're a buyer. It also means things are getting crazier if you're a seller, and it's getting easier to sell. Now, this is our list to close ratio, and I think it's really important to remember that, like our closed sale prices, this data is based on about a month ago. What's fascinating to me in this graph is sort of the directional difference between our under 1 million and our $1 to $2 million price ranges. We actually see that while these numbers have traditionally moved similarly to one another, in the past week or so, remember again, the past 45 days or so, 30 to 45 days in terms of sales contracts, our list to close ratio actually dropped for our under 1 million, and it actually went up for our 1 to 2 million. Now, admittedly, if we look kind of and we take a step back, right, in absolutist sense, both of these numbers are over 100%. So think about what that means in general. That means that on average, homes are selling for higher than their list prices. And, I think just that statement said out loud really kind of tells you what sort of a market that we're in. I do want to caution people, though, and tell people that this is an average. That doesn't mean that every house will sell for over list price. It means that some houses will probably sell for a lot over list price, and some houses will probably sell for under list price. So you have to remember that when you're ranking offers and you're kind of deciding on a strategy, it is very much keyed to exactly the strategy on that particular home. If there's a home that has been on the market for 6 months and has not sold in this market, that is probably one that will be going for less than the list price, right? Obviously, if it's a home that went on the market 2 days ago and they have 3 offers already, it is probably going to go over the list price, right? So just remember that these aren't hard and fast rules. We're just trying to take a look at the health of the market as a whole. So if I go ahead and I go back here, and we go back into our stats, we have our days on market for new contracts. And this is another one, right? We've sort of watched this kind of march from the end of last year as these numbers have gone down. You see a slight uptick, I think, of about a day for our 1 to 2 million, and kind of a flattening on our under 1 million. But just think about this. We're at about 29 days on market on average. And you have to remember that most agents do not change that status to not accrue days on market until they have a contingency release. So the reality is, if you're thinking to yourself, what's the average number of days before a home goes from active, it gets put on the market, and it goes under contract, it's actually much shorter than this. It's really closer to like a 2-week type number. Just kind of an extraordinary market that we are in. Again, we saw a little bit of a bump in the new year as there was a flood of new inventory, and then it just went right back to heading in that downward direction and ending at these sort of ultra low numbers that we see here. Now, finally, I want to go over affordability. And, affordability is something that we track for a wide variety of reasons. And I just want to take a second and tell you why we track affordability. Now, yes, of course, it's important to know where are payments, like where have payments been, where are payments heading, right? That is completely important. But there's another reason that we track affordability. When I think about not only where prices are, but where prices could go, right? One of the things that people talk about is a market that can't take any more price increases. Well, one of the ways that you know this is by actually monitoring that affordability figure. And that's part of the reason why we monitor it is as that affordability figure, if it stays low, it means the market has room to grow in prices. And it kind of changes my outlook of the next 90 days. What kind of spring are we going to have in this market? But when that affordability starts getting reduced, I start tempering back my expectations of price increases. So I'm going to jump back in here and we're going to kind of go through the shape of the chart here and kind of walk you through sort of the logic. So if you notice, we have these dates spread apart. Like this is July of 2018, which is our baseline number, right? That's 100%. Then through 2019, it got cheaper, right? Beginning of 2019, it flattened. It kind of went up as we kind of went through 2020. Remember, price increases. Then as rates fell even further, affordability actually improved. And then we came into this year, and now we are reporting our weekly stats. And guess what? Um, you know, Interest rates bumped last week, and look what that did to affordability. We went from trading in the low 90s relative to 2018 to nearly matching 2018's prices. Now, rates back down a little bit this week, and we see a little bit of relief, which is what's indicated, by this graph dropping here. But I think it's important to understand these numbers are all still below that 2018 level. We are currently at like a 96th percentile level in when we're talking about affordability. And that's going to really lead into the next conversation. So um, I don't have a snazzy graph for this, but I'm going to talk about the question that I think everyone is asking, or at least everyone who is presently a homeowner is asking. And I probably get asked this about once a week. And I'm going to give you the benefit of the advice that not only do I give my clients, but the same exact advice that I give my family members as well who call me and ask about this. And that question is, I've been thinking about upgrading my home and moving up. Is now the time to do it? And how can I do that in a way that is the least disruptive to my family? So we're gonna like unpack this a little bit. And I think that whether now is a good time depends not only a lot of market factors, but it really depends on a lot of personal factors. If you are in a home that you love, and you just can go more expensive because you get a job promotion or other reasons, that doesn't necessarily mean you should, right? Now if you were in a home that you bought that was your first home and it wasn't very big and you had zero kids and now you have one child and you're thinking about a second child, well, that creates a bit of a need, right, for more space. And it might be, that part of it. But now let's talk about the market side, right? Like, so let's assume you kind of pass the personal side of things. The market side is this. I don't think if you want to make a move up, right? If you think it is right for you to make a move, I don't think it will get any cheaper to do that for you than it is right now. And I'm going to explain a couple reasons why I think that. So, reason number one is I feel like our housing payments have room to grow. And that means one of two things or both. It means either interest rates have room to grow, right? Or prices have room to grow. And, let's assume for a second that prices stay steady. If interest rates were to jump even 1%, right? So we're in the high twos and we go to the high threes, that results in payments on the same price house going up 12%. So, that means that if you wait 3 or 4 months, you could essentially be facing a 12% higher payment for the same house that you want to buy today. So I don't think that's really a very good move, right? Like, so that's kind of a knock against waiting and a reason why I think your situation will get worse, not better. The second thing is, I think prices will go up. I think there is room for prices to go up based on where we are trading at payment levels, based on our inventory levels in the market. I think that I'm expecting a spring where prices will rise. And that means that, yes, you will get more money for your current home by waiting, but the home that you are planning on buying, if it is more expensive, will actually move farther away from you, right? Like, and let's do the math. If your home and the dream home each go up by 10%, but you're selling a condo for 400 today and you want to buy a home for $500,000, right? Or $600,000, let's say, that means your home today will go up 40 grand and the home you want to buy will go up 60 in the case of, moving up to a $600,000 property. So to me, there's a lot of downside risks to waiting. So if you're the kind of person that is thinking about upgrading, think it's the right move for you personally in your life, from a financial perspective, I don't think it will ever be easier than it is today from a financial perspective to do that. And I think also it's important to remember you get to lock in that rate, almost indefinitely, right? Like, you have that rate for 30 years if you get a 30-year fixed rate loan. Now, the second part of this question is how to do this in a manner that is the least disruptive to your family. And you actually have a couple of options. Something that we've employed for a lot of our clients, especially if they're moving from kind of an entry level property to an upgraded level property, is that we recommend they put their home on the market aggressively. We work the bidding war, we get multiple bids, and we demand a 60-day rent back. And because most of the buyers of the entry level properties are coming from a rental, they're actually able to accommodate that. And what that means is that even after you sell your home, you still get to stay in it for 60 days. So the net result is you get 60 to 70 days to look for your next house while you've already secured the buyer for your own home. And that really is what gives you sort of the leverage to be able to buy the home that you want as that kind of upgraded home, which is the whole point, right? Like you don't want to settle and feel rushed into making that purchase. You actually want to have some time to look for the right home and make that purchase. Anyhow, my mouth is a little bit dry. I've been going here for I think 10, 15 minutes. I hope you've enjoyed our market update. We're trying to give a little bit of insight at the end of these. Something I've been wanting to do is give a little bit of just kind of like advice and strategy at the end of them. So I hope you like that. If you do, let us know in the comments. If you have other questions you'd like answered, put those in there as well. And we will work on that for next week. As always, like, subscribe, hit the notification bell if you are watching on YouTube. We also do a first-time homebuyer podcast, or not podcast, a video just like this one, but we cover stats specific to entry-level first-time homebuyers, and that comes out on Fridays. So please do tune in for that, and we will see you soon.